It's not clear exactly where it originated, but in the Korean stock market, the individual investors are compared to a group of ants. Recently, one more nickname has been attached to them, and it is an analogy to the 19th century revolution movement called Donghak. Donghak refers to a group of Korean peasants in the late 19th century who rose against the feudal order and imperialism. The analogy is used because the retail investors in the stock market are thought to be fighting to protect the country against foreign investors who were selling off Korean stocks. Just as their namesake ancestors did more than a century ago, these Donghak ants have taken on a great cause. Until now, their efforts seem to work. The benchmark KOSPI fell about 30% upon the onset of COVID-19 back in March, but it rebounded to its pre-COVID-19 level. If you joined the market in March and held on to your stocks, you must have enjoyed a generous return. What's different about this round of stock market investment craze is that many new investors in their 20s and 30s joined. This has caused many experts to worry. Stock investment by nature involves a lot of risk, and these individual investors lack experience and knowledge. What's more worrisome is that many of them took out loans to enter the stock market. The market looks bullish due to the sharp rebound, but there are warning signs that the current rally is a bubble. Nobody knows for sure where the stock market will move, as shockwaves of COVID-19 have not been fully reflected on companies' financial statements yet. Some point out the other side of Donghak analogy. Historically, the Donghak movement failed in the end, and the participants' ideals didn't materialize. Will the 19th century's historical facts be a bad omen for the retail investors in 2020? Everybody hopes it won't. Individual investors who took advantage of the bargain basement prices for stocks have been compared to the Donghak peasant revolution in 1894. These retail investors' motivation is not only money, but protectionism against foreign investors dumping their stocks in early Q2. Okay, so here I said individual investors. So in the passage you heard individual investors and retail investors. Those are people, I guess like you and me, who are interested in stocks and we buy them, but we are not actively traders. We're not working for a stock trading company. We're not working for financial institutions. We're just using our own money in hopes that the stock will go up. So we call those people individual investors or retail investors. And then I said they took advantage of them at bargain basement prices. Bargain basement prices are when a product or service is very low, usually to oversupply or low demand. Or for in this case, the market went down so much, it went down 30%, that a lot of these Korean companies were at their cheapest in a long time. So we're like, wow, those are bargain basement prices. So if something's a bargain basement, a lot of people are going to buy them. And then I said we talked about the retail investors, again, individual investors, and then we talked about protectionism. So protectionism is when a country wants to protect a certain asset or resource. So for example, there's a lot of protectionism in Korea against agricultural products. You guys don't export rice and you don't import it either. That's protectionism. So if a country is raising tariffs on something or is protecting a certain group or raising taxes internally, and they're not going to import anything, they're protecting their own goods. And then finally, I said foreign investors dumping their stocks in early Q2. Now, a lot of Koreans, Q2 means the second quarter of the year. So that's March, April, May. April, May, June. So that's kind of the second quarter of the year. Now, a lot of Koreans will say 2Q. That is incorrect. So we always say Q2 or we say the second quarter, but we never say 2Q. That's incorrect. New stock investors who bought stocks during the flash crash in March have been dubbed the name Donghak ants. This title has been given to them because they're caused to protect Korean companies whose stock was dumped by foreign investors in the early part of the second quarter. So the first part I talked about the flash crash. So a flash crash is a sudden momentary crash in the stock market. So if you're looking at the stock market, things are going great. You might see a quick dip or drop in the stock market, and then it goes back up. So usually when the stock market crashes, that's very bad for everybody. But a flash crash is kind of a temporary crash where things go down. They stay down for a little bit, but then go right back up. So we call that a flash crash. And that has been dubbed the name Donghak ants. If something is dubbed the name, it's given a title or a phrase. So when this happened, people started buying in. Those people who bought in, their new name or nickname was Donghak ants. So we say they were dubbed the name or dubbed the title. And then finally, I said in the last sentence, company stocks were dumped by foreign investors. So dump is, it usually means to throw away or throw in the trash. But if you dump the stock, that means you've sold it off and you've kind of forgotten about it. And again, the last part I said the second quarter, again, Q2, second quarter, not 2Q. New and young investors who have just started trading equities have taken on debt to fund their new investments, which is raising eyebrows in the financial world. So in that first part, I said they started trading equities or trading equity. That is another word for stocks. So if there's a big bank, they might be trading equities or commodities. Commodities are like pork bellies, oranges, oil. If they're trading FX, that's foreign exchange. That means they're trading currencies. When we talk about equities, those are just stocks for publicly traded companies. And also we call it equity stocks. And then also equity can also mean the amount of money you put into something. So if you'd like to invest in a restaurant, and you want to put in 10 million won, you have 10 million in equity. So it means cash invested, but it also means stocks you can trade. And finally, I said this debt, which is raising eyebrows in the financial world. So raising eyebrows can mean something good. It can mean something bad, but it means it's drawing attention to something. So now you have all these young people taking out loans and they're investing in the stock market. Raising eyebrows in this case means that people are worried because if they're investing this money, which is based on debt, and the stock market crashes, it's going to cause a lot of financial trouble. So it's raising eyebrows means it's bringing attention to this subject. New traders have taken out loans and have put money into the stock market. This could prove disastrous if the market crashes. So we've talked about before a flash crash, which is just a quick crash. But if the entire market crashes, that means it goes down a lot and a lot of people are going to lose money. Nobody has a crystal ball when it comes to the stock market. Analysts say that the recent spike in stocks is a bubble that is about to burst. So first I said nobody has a crystal ball. So, the Western fortune tellers are a little bit different than the Korean fortune tellers. And like traditionally or stereotypically, the fortune teller would have this ball and it was crystal, kind of glass, and they would look into it and see your future. But we use the word crystal ball, meaning like no one has a crystal ball means no one can see into the future. No one is a psychic. No one can tell the fortune. So if you don't have a crystal ball, means that you cannot predict the future. And I said analysts say that there was a recent spike in stocks. So a spike is like when the stock market goes up very quickly and it reaches a high point. That means it's spiked. And then after a spike, it drops, kind of like if you look at a very sharp angle, triangle, or pyramid. And then the stock is a bubble that is about to burst. So when we talk about bubbles, we talk about everyone investing in something, the price going up. But then what happens is if the bubble creates kind of an artificial fake economy or demand that too many people are in, then it bursts. And when the bubble bursts, all the prices drop down dramatically. No one knows if it will be a bull or bear market next year. But many experts think that we may be facing a temporary jump in the stock market that will lead to another crash in the near future. So first I said no one will know if there's going to be a bull or bear market. So in a bull market, everyone's buying, trading volume is very high, and the prices are very high. But the opposite is a bear market. A bear market is when not many people are trading, stocks are low, people are very careful to invest. So we talk about bull markets, which are really good, but bear markets are usually bad and usually a sign of a recession. And then I said they're facing a temporary jump in the stock market. So physically you can jump up and down, but if you look at a graph, numbers can jump up. That means they go up in value, and then they can also crash. So a jump in prices is also similar to a spike in prices. And then finally, the last one I said that may lead to another crash in the near future. So in the near future means a time which is unspecific in the future. It could be a month, it could be a year, but it's quite unspecific when we talk about the near future. Day and passive traders have a lot of hurdles to overcome if they want to make money in the stock market. Investors need to look at multiple factors and constantly stay vigilant. So in the first one, I said day and passive traders. So a day trader is someone who is trading stocks and other investments, usually as their job. They're doing it at home. They're constantly looking at the trades, constantly trading, always up to date with the market. Now, a passive trader, for example, like I'm a passive trader. I might see a stock that I like, invest in it, and then I'd wait a couple days to check on it. I kind of have an alert on my phone to see what happens, but I'm not doing it every day, all day. It means I look at it maybe once a day or once every 2 or 3 days, and I might trade it if it's gaining or losing money. So those are kind of passive traders. And I said they had a lot of hurdles to overcome. So a hurdle is like an obstacle that, people jump over in the Olympics, but we talk about hurdles in life. Those are obstacles that get in your way. So for example, a passive trader, they have a lot of obstacles to make money because they don't have a lot of information about the market. They don't work for a big bank. They don't have analysts telling what to do. All the kind of predictions they have to make are from their own intuition and their own research. So there's a lot of things that kind of get in the way. So it's more difficult for an individual to make money. So those are hurdles. And finally, I said investors need to look at multiple factors and constantly stay vigilant. To stay vigilant means that you are always looking around for danger. You're always worried about something happening. So if you go to a country and you think it's dangerous, you've got to stay vigilant. You've got to look around. You've got to check out if there's people trying to rob you. You've got to always make sure you're not going to get involved in a scam. It means your attention is always up and you're always looking around. You're always aware. So staying vigilant means your mind is constantly worried about being attacked or someone's trying to hurt you. So in this case, if you're in the stock market, you've really got to keep your attention on what's happening in the market because so many bad things could happen. You need to constantly keep your guard up if you're involved in the financial markets. You have so much coming at you from all directions. It's easy to lose money if you're just an amateur investor. So I said you need to keep your guard up, very similar to staying vigilant. Keeping your guard up means keeping your fists over your face in boxing. It means keeping the sword in front of you in sword fighting. But your guard up means you always have to pay attention to what's going on because so many bad things can happen. And I said so much is coming at you from all directions. So things are coming at you in the front, the side, and the back. Meaning if you invest in the stock, you've got to look at the company. You've got to look at the country it's in. You've got to look at the competition. You've got to look at the weather in some cases. If you buy a stock in a company that has hotels on the beach, if it's a very cold summer, well, that's another factor you have to look at. So many things you have to look at. And finally, I said, if you're just an amateur investor. So we talked about retail investors, individual investors, but amateur investors are just regular people. They're not paid to invest. They're just using their own money to kind of invest in the stock market. So it's another word we use for an individual investor. Thanks for downloading, guys, and please check out the Konglish Killer book when you get a chance. And I hope you enjoyed the episode. Bye-bye.